Most people think real estate markets move because of prices, interest rate, or headlines. But that's not what actually drives behavior. In fact, markets do not move because of numbers, but they are moved because of people. And more importantly, the type of people inside a city. For example, two cities can have the same number of people, but completely different market behavior. So if you really want to understand how market reacts, you need to go deeper than the service level data. You need to understand what I call levels of residency commitment. Every city is built on layers, where at the top is transit demand, such as tourist or short-term stays. Yes, they consume the city, but they don't anchor it. And at the base you have structural residency. And at this layer we have citizens, and they are permanent and non-reversible. But the most important layer sits in between, which is economic residency. And this is where most of people get it wrong. Economic residency is not one group. In fact, it's a spectrum, where we have on one side the long-term expats, and this group are stable, anchored, and slow to react. On the other hand, we have the mobile expats. This group are flexible, sensitive, and fast to react. And that difference is what creates volatility. Now, this has become critical in Dubai, because 85 to 90% of the population are expats, which means Dubai is driven by economic residency, not permanent population. That's why in strong conditions, demand expands quickly. But in uncertainty, people do not exit immediately. In fact, they pause. Buyers wait, investors hold liquidity, and renters delay decisions. Therefore, the demand does not disappear first. In fact, it freezes. And we saw this in 2020, where short-term demand collapsed instantly. But larger units, such as villas, held much better, because the semi-anchored population stayed and adjusted instead of leaving. And this is exactly where opportunities appears. Not from price drops, but from liquidity gaps. So when you analyze the market, don't just look at prices or supply, but look at the structure of the population. Because real estate is not just about location, but it's about the behavior of the people inside that location. And volatility, where the opportunities lies, does not come from the whole market. In fact, it comes from the mobile layer. So the real question here is not how many people live in a city, but the real question is how many are committed to stay. And through our lens, we do not chase the market. In fact, we decode the structure and position within it.